Okay, if you're an investor, you know this feeling. You're just staring at this ocean of thousands and thousands of companies trying to find that one hidden gem. It's totally overwhelming, right? But what if you had a tool that could act like your own personal search engine for investments? Well, that's exactly what we're talking about today, the stock screener. And just to put this problem into perspective, let me throw a number at you. There are over 6,000 publicly traded companies in the United States alone. 6,000. How could any single person possibly keep track of all of them? I mean, even if you just focus on the big names, you're still looking at a universe of over 2,000 potential investments. It's an impossible task. So that's the big question, isn't it? How do you possibly sift through all that noise to find the investments that actually fit your strategy? You can't read every single annual report. It's just not going to happen. What you need is a system. And that system is the stock screener. It is literally designed to turn that overwhelming sea of options into a nice, manageable pond of high potential possibilities. So what is it exactly? Well, a stock screener is a tool that lets you filter the entire market based on specific criteria that you set. And we're not talking about guesswork here. We are talking about hard numbers, things like earnings, valuation, growth rates, and a company's financial health. And honestly, this is the perfect way to think about it. It really is like a search engine for stocks. But instead of typing in keywords like you would on Google, you're plugging in financial criteria. So for example, you can tell it, hey, show me all the companies with a price-to-earnings ratio below 15. Or you could say, find me all the tech stocks that are growing their revenue by more than 20% a year. The screener does all that heavy lifting for you. But listen, a powerful tool is only as good as the person using it. A really smart screen isn't just a Brandon checklist of filters. No, it's a structured, 4-layer process, and it's designed to systematically find the best possible investment candidates for you. So, these are the 4 layers. First, you define your playing field. Then, you set up some basic quality checks, kind of like a bouncer at a club. Third, and this is the fun part, you apply your unique investment strategy. And finally, you rank the survivors to prioritize your research. So let's break each one down. First up, defining your universe. This is all about deciding where you even want to look in the first place. Which pond do you want to fish in? Are you interested in those big, stable companies? You might set a market cap minimum of, say, over $2 billion. Or maybe you have expertise in a certain area. Well, you can filter by sector like technology or healthcare. This first step is all about focus. All right, next up, setting quality gates. Before you even ask if a stock is a good deal, you've got to know if it's a good business. These are your non-negotiables. Is the company actually profitable? Can it pay its bills? Is it at risk of going bankrupt? You can even use specific metrics like the Altman Z-score, which is this really cool formula that predicts the likelihood of a company going bust. This step is all about weeding out the weak businesses right from the start. Okay, now we get to layer 3, and this is where it gets personal. This is where you come in. It's where your personality as an investor really comes into play. You apply the specific metrics that define your investment philosophy, whether you're looking for value, growth, dividends, or something else entirely. So, for example, let's say you're a value investor. You're on the hunt for good companies at a fair price, a strategy that can work really well in uncertain markets. Your screen would look for things like a low PE ratio, or maybe a low EV to EBA dieta, which is just another way to measure a company's value. You'd also probably want a high Piotroski F-Score, which is a neat little number that scores a company's financial health. It's all about finding quality on sale. But what if you're a growth investor? Someone focused on future potential. Well, your screener would look completely different. You'd be prioritizing high revenue growth, strong return on invested capital, and really high gross margins. You might even use a metric like the Mohoram G-score, which is designed specifically to identify growth stocks that are likely to outperform. See? You're telling the screener to find companies that are expanding quickly and profitably. And finally, we have the 4th layer, ranking. Once the screener gives you a list of companies that have passed all your tests, you're not quite done. The final step is to sort that list by the single most important metric to you. This turns a simple list into an actionable, prioritized queue for you to start your deep dive research. So, how do you put all of this into practice? Well, this is where a tool like the FinStill screener comes in. It's actually designed around this exact 4-layer process. It allows you to build these really sophisticated screens using dozens of different factors, from fundamental health to some pretty advanced risk metrics. It really puts this entire powerful process right at your fingertips. Now, before we wrap up, there is one more absolutely critical point we need to cover. Seriously, this is a common trap that a lot of investors fall into, and it's understanding the difference between screening for ideas and selecting an investment. And this is the distinction right here. The screener's job is to find candidates. It takes just a few minutes, uses that quantitative data, and give you a broad list of ideas. Your job, the full analysis, is everything that comes next. That's the part that takes hours per stock, combining the numbers with your own qualitative judgment to build real conviction in a single company. And, understanding that distinction helps you avoid these common mistakes. For one, don't use so many filters that you only get 2 results. And please never ever mistake your screened list for an automatic buy list. And always remember to consider the context of a company's sector, because numbers mean very different things in different industries. Look, if you take only one thing away from this whole explainer, let it be this. A stock screener is your idea generation engine. It points you where to look, but the final decision to invest, that comes from your own detailed research. So you now understand the what, the why, and the how of stock screening. The question is, what are you going to do with this knowledge? Well, if you want to keep learning, you should definitely follow us and check out fffinstill.com. We've built this huge library of over 300 free learning concepts, from deep dives into financial metrics to breakdowns of different investment strategies. It's all designed to help you become a smarter, more confident investor. And if you're ready to put theory into practice, you can try the FinStill screener we've been talking about, completely free for 1 month. Just use the code FREEFOUNDER. It's the perfect way to start building your own screens and hunting for your next great investment idea. So the only question left is, what will your first screen look for?